Activist investing is a fairly new concept in the Australian market, but it's actually a recognised asset class overseas. To tell us a little bit more about this space, Gabriel Radzyminski from Sandon Capital is with me today. Welcome, Gabriel.
Thanks for having me, Darren.
My pleasure. We might start by just having you explain what activist investing is.
Sure. Well, look, activist investing it's a great name, but ultimately it's not that different from a lot of other types of investing, except that activist investors look to take a very much more hands-on and proactive role with the companies in which they invest. Think of it as the difference between passive and active ownership. So not passive and active investing, but passive and active ownership. Most investors typically are passive in their ownership of companies, whereas activist investors are the ones who set out deliberately and explicitly to get involved in the direction their companies take.
Okay, so when we're looking at that, are there different forms of activism that people partake in?
Yeah, look, there is, and I think when you said earlier that it's a new form of investing in Australia, I don't think it's necessarily new. It's more that the more aggressive forms of activism haven't really been seen much in Australia. Activism, I think, takes form across a spectrum, from very subtle passive or soft activism to the very hard activism that is probably more well known in terms of headlines.
Yep. So are there any key areas that you would identify which probably makes a particular company a target for activist investing?
Look, I think first and foremost, companies that underperform and companies that fail to deliver. At the end of the day, activism really only works if there's a need for a change. Mm-hmm. If investors are dissatisfied, that's when they're more likely to support changes from the status quo.
Now, you've identified the Australian market as having particular appeal for activism and activist investing. Why is that?
Well, I think, so the Australian market is relatively small by global standards, which means that Australian companies have, for the most part, avoided the attention of the big activist funds around the world. The Australian market in terms of funds management is relatively heavily concentrated in a small number of investment houses. Mm-hmm. And we think that lends the Australian market to being susceptible to complacency and underperformance in certain areas. Mm-hmm. And because there are not many investors who have the capacity or the skills to engage in activist strategies, it means that from our perspective, for investors like Sandon Capital, we think there is a very fertile hunting ground for what we do.
Mm-hmm, mm-hmm. Now, you said it's not necessarily a brand new concept in the Australian market, but why aren't we seeing more fund managers sort of offer this type of product?
Very simply, it's pretty intensive and takes a lot of hard work. If you think of most fund management portfolios, they typically are highly diverse portfolios with 50, 60, 70, maybe more investments. Yep. Our portfolios, by contrast, 15 to 25 at the most. We've typically got one or two investments that are in what we would call active engagement. Yep. It is a pretty all-consuming effort, which means that it's very hard to do mainstream traditional funds management, where you're trying to manage a wide, diverse range of investments, and at the same time trying to be intensely focused on one investment. Therefore, we see it as something that is best pursued when you can focus the amount of time and effort required. I think there's been a lot of instances where mainstream fund managers might have been forced or compelled to apply activist techniques because they've been unhappy with the company's performance. And I think if you were to ask most of them, and we've spoken with a number of them over the years, they would probably say, gee, I wish I didn't have to do that again.
Yeah, okay. Now, activism obviously is not something that happens overnight, as in you change something to get a different result. That obviously takes a little bit of time. Yeah. Does that change the time frame that investors should look at if they're looking at having an allocation to an activism investment manager?
Look, I think it does. We're very much focused on medium to long-term outcomes. We tell our investors to focus on medium to long-term outcomes with respect to our performance. Mm-hmm. It's not something that can be achieved in the short term. We would say that 3 to 5 years is a good investment horizon for considering an investment with us. And the investments that we make in the companies that we target typically have an investment horizon of 2 to 3 years, give or take. There are some where if we feel that value is being destroyed we feel compelled to move much faster and more aggressively to try and stop and prevent value destruction. In companies where we feel that there is an opportunity to improve the situation, we may be a bit more patient, or we may indeed need to be a bit more patient. But we can afford to be patient if we don't feel that we're losing value by doing so.
Yeah. Now, is there any danger of the perception of market manipulation or anything like that in what you do, and how do you guard against something like that?
Well, look, I think what we've found is that there's a reluctance by a lot of institutional investors to speak with activist investors for fear of, not so much market manipulation, but for fear of inadvertently creating associations. So basically under Corporations Act, there's some rules around disclosing investors' associations. Once you go above 5% collectively, you would need to, if you've made any understandings or agreements with other investors, that constitutes an agreement or an association, and therefore you would need to disclose it. So as long as people are aware of the rules and can have discussions with other shareholders around the issues that face a company without ever coming to those agreements or understanding, then there's no issue. One of the other things that we're very conscious of, for fear of more insider trading related issues, when we go and speak to other shareholders, we only do so once we've made a public presentation available that articulates our thesis and our thoughts about a company. That's the way that we can allow the market to have a discussion about what we think without inadvertently giving rise to insider trading risks.
Yeah. Now, Sandon Capital was involved in the Undiscovered Managers Showcase, which was hosted by Financial Observer and Evergreen Consulting. Can you tell us a little bit about how Sandon plays in this space and what the offering is all about? Okay,
we've got currently two products. One is our wholesale fund, which is Sandon Capital Activist Fund, very imaginatively titled. It's a wholesale unit trust that's been going for over 8 years. We started it in September 2009, and that's basically available to wholesale investors. We're not on any platforms at the moment. And then we've also got our listed investment company called Sandon Capital Investments, another very creative name, and that's a listed investment company. It trades on the ASX and pays a fully franked dividend yield, unlike the wholesale trust, which basically just distributes all income. We also recently established an offshore Cayman Islands offshore fund for international investors who might be interested in investing in Australia. Okay, great. Well, thank you very much for your time today, Gabriel. No, thank you. Appreciate the opportunity.